Hey everyone. So now we're going to launch into the kind of next section, and I think we're going to talk about each individual investor's kind of key theme that they want to talk, themes that they want to talk about, in which they're kind of very kind of bullish or excited about in 2021. So going to be kind of 7-8 minutes for each speaker, just to kind of outlay the kind of key themes. And I think we will start with Simone. If you want to introduce your kind of key theme.
Yeah. So okay, for here I'm gonna talk more about. As you understand, I don't like talking a lot about economy. I like to talk more about science. So I'm gonna spend a bit more time about understanding science behind my investments. So my idea for 2021, but not just 2021, it's gonna be for the next 10 years probably. It's immunotherapy. So in my opinion, at least the way I invest is to try to find new trends in innovation. And I believe that immunotherapy is one of that. And that's the capability of changing completely the pharmaceutical industry. And with that, I'm talking like potentially ending cancer over the next 20 years or so. They said, you know what, I'm gonna buy some of the stocks. And I did my investments. It was 2017. Started investing the students, and once adjustments later, sometimes 2018, the company I invested in was acquired by 4 times the share price from Zheng. And that gave me a lot of optimism about investing in this area. And actually, that happened during a period where inflation and the interest rates actually were going up. So that kind of confirmed that if you are investing into innovations, then doesn't matter if interest rates are going up or down, you are very likely to make money anyway. So what is immunotherapy? Immunotherapy is basically a way to reprogram your own body immune system to attack cancer. So basically, your own immune system has the capability to kill cancer cells, but for some reasons, cancer can always shut down your immune system. But now we are finding ways to reprogram your immune system, so you can stop cancer from blocking your immune system, and that has shown very good effects on patients' benefits. So I built my portfolio basically around these investment ideas. And just to give you a few, not many people knows about immunotherapies, and but this is already changing your life without you to know. So just I wrote down a few numbers so you can have the understanding of how much this is changing your life. So for melanoma, that was cancer types that was very low survival probability, like down to 5% over 5 years. Now with immunotherapy, we managed to increase it up to almost 50%. So these are like a major impact in your daily life. And even lung cancer, it increased the survival probability of around from 20 months on average to 22 months. So almost double it. And the market's opportunity is huge. So nowadays, immunotherapies are almost the most selling drugs for every pharmaceutical company. For instance, Merck has the most best-selling drug with more than 10 billion revenue per year from a single immunotherapy. And here we are just at the beginning, because here this is just a single way we can improve, we can reprogram immune system to fight cancer. And we are finding new ways every day that we can use it to reprogram your immune system. And we are finding new combinations, and we are finding which patients are more likely to respond to the therapies and what kind of therapies or what kind of combination. And these trends will keep increasing and keep driving revenue of pharmaceutical companies over the next year, but probably much more than that, because patents are not going to expire before 2026. So I'm expecting Merck and Roche and AstraZeneca, which are the leading stocks for now into this field, to keep increasing their revenue at least until 2027.
Okay.
And a lot of players are coming in, not just from the pharmaceutical world. It's just, for instance, ARK Investor, Microsoft Venture, they are all investing into this area. So I'm quite bullish into this, and I'm very excited to be to invest in these technologies and these therapies. So yeah, so this is why I picked these stocks, and this is actually why I'm investing mostly, because I want to be into these investments.
Thanks for that, Simone. I think that's really good insight for people that didn't understand immunotherapy before and weren't kind of experts on cancer. So I think you've given them a very good overview there of the benefits of immunotherapy. I wanted to ask you just a couple of questions on it. I think one of the questions I wanted to ask you is, obviously immunotherapy, from my understanding, is probably quite a wide spectrum of things that it can do. Obviously, I think one of them is cancer, but how has kind of the COVID research, how has that kind of affected the investments in immunotherapy and some of the use cases potentially? Is it just cancer, or is there other use cases for it?
So mostly has been used for cancer, but now more they are trying to expand this kind of treatments to other areas. We are like autoimmune diseases, virology as well, so COVID as well, and not the way that they are impacting other areas, or they have been impacted by other areas like COVID. It's not just that they can be useful for that one, but like there were a lot of investments into COVID research that this went into better understanding of how immune system works, and that will reflect into better immunotherapies also for cancer and for autoimmune diseases. So the discovery we are making now for COVID related stuffs can actually be used for other diseases, because immune systems can fight almost everything. So yeah, so I'm expecting COVID that will push this field even further over the next years.
Yeah. How is that going to affect? Do you think it's going to really change the way that kind of cancer is treated in patients? So can you see, like, so just for example, can you see it kind of reducing the amount of radiotherapy that people have to have when they have cancer, or is it more of a kind of a type of treatment which is done dually with radiotherapy or other cancer treatments?
Yeah, that's a very good question, and there's still there is obviously a lot of debates about that in the literature. So right now, most of the drugs are used in combination with chemotherapy or standard treatments. Sometimes they are used in patients that hasn't shown any progress from chemotherapy or or other type of standard treatments. But the amount of options for the patients, it's increasing a lot. We have chemotherapy, we have radiotherapy, we have targets therapy, we have immunotherapy. not everybody is gonna react the same way to the same therapy. So the next big challenge is probably to understand which patients should get this kind of immunotherapy, or which patients should have a target therapy with some other drugs, or which patients should go for chemotherapy only. So there has been a lot of works into data, and companies are investing in data, governments are investing in data. So Joe Biden, when he was vice president already, one of his biggest initiative was immunotherapy cancer moonshots. And they invested billions of dollars in the immunotherapy. And I'm expecting him to keep investing in that one as a president as well.
So where, Simone, so where are we in the adoption and the life cycle of immunotherapy? Are we just in the research stages, or is some targeted drugs been out there? How is the kind of evolution of that going?
So we have depends for each cancer type.
Yeah.
So for solid tumors, there are a few immunotherapies that are available on the market. Not every cancer types has already been received an approval for that one, but I'm expecting that sooner or later you will have approved of immunotherapies in almost every solid cancer. So that is only one type of immunotherapies. There are, I think, hundreds or probably hundreds of immunotherapies that are currently in clinical trials. And we are seeing new startups, even new IPOs every year focusing on this. And there is really a lot of investment. So it's a continuous, and this is going to grow and grow. So we are already using this in the clinics, but it will keep growing. Yeah.
Awesome. Okay, one final question before we wrap up the questions. Is how does a normal investor go about getting exposure to immunotherapy drugs? Because from my understanding is obviously a lot of these big, large pharmaceutical companies, they have lots of different types of drugs, right? So
right.
How would you get exposure specifically to immunotherapy stocks, ETFs, however people would like to invest in them?
Right. So pharma have like a huge, as you said, have many, they need to diversify the risk. So they are going to invest into different treatments. But even big pharma like Merck, I think it's like 25% of the revenue comes from a single immunotherapy. And over the next 5 years, probably that is going to be 50% of its revenue, or something like that. So there are pharmas like Merck, Roche, and AstraZeneca that have a big focus on immunotherapy. That's why I have those in my portfolio. There are other small cap stocks like now I'm investing in IT Biologics, which is a very early stage company, and that is purely immunotherapy. Obviously, there is a high risk in that one because I think it has a market cap of 200 million, which is nothing. Yeah, it is on Etoro, yes. It is on Etoro. But I think it's worth the risk. So yeah, but if you have no idea of which stocks you have to pick, you can always copy my trade. Not a financial advice.
This is not financial advice, but no, you did hear it from an expert. So, yeah. Okay, but that's really, really interesting to hear that kind of insight.
Sorry, just one thing to chime in. I bought Heat Biologics because of Simone's advice. I know it's not financial advice, but he gave a very prudent kind of argument. So I bought the stock the second I came home. So yeah, good job, man.
Oh, just one point actually, Simone, just very quickly. Apart from just stock market investing, etc., how would people get a very quick insight and be able to find some resources on immunotherapy if they were looking as a viewer?
So there is a website from a Cancer Research Institute. It's a US institute. And they have a lot of information that is easy to understand for patients or for just people that wants to learn about the immunotherapy in general. And they also have a lot of information about the clinical landscape, which treatments are available for which tumor type. So that's a very good starting point more for an investments point of view. It's a field that is changing rapidly. So every day there are new companies coming out in this field. So yeah, you might read some healthcare blogs. They will probably talk about immunotherapy as well, which is big things now.
Excellent. Thank you very much, Simone. That's a great insight. I think a lot of people would have learned from that. So thank you very much.
Thank you.
Who are we going to next? Is it Zach or Amar? Who wants to present?
It's gonna be Amar.
Amar? Okay, Amar, take the stage.
Okay, so I think for the investment idea I chose Amazon. So Amazon is currently my top holding in both my YouTube portfolio and in my Etoro portfolio. So Amazon is a stock I think it's that I've held for many years. I think it's a household name. I think we all know a lot about it actually. So I don't really need to explain Amazon's business in great detail, I think. But if you have any questions, you can always ask me. So I'll go into why I like Amazon. I think if you name any mega trend that we are currently experiencing in the world, Amazon is probably part of that trend. If you look at e-commerce, it's one of the biggest e-commerce players in the world. But even more than e-commerce, I think another mega trend that is taking over the world is cloud computing. So I'm very bullish on cloud computing for Amazon. It has cloud computing is run by its AWS division. So I think if you look at the amount of IT spending there is, still is a very small fraction of that amount that is being spent on cloud computing. A lot of companies are still quite backward. And you can look at that through IBM. IBM used to be one of the leaders in the so-called private computing, which was on premises. But you can see increasingly a lot of companies are moving their IT to the cloud. And Amazon has the dominant market share in cloud computing. There are other players, of course, there's Microsoft, and then there's Google, and then in China, there's Alibaba. But the very fact that all these big tech players are getting into cloud computing shows how lucrative and valuable cloud computing is going to be. And Amazon has that advantage because it has about, I think, a 7-year or 8-year lead start compared to many of these other big tech players. And it provides a type of cloud computing which is called infrastructure as a service. So basically, it provides that base layer of cloud computing on which you can build other services and other products. So an example of one of those products, Microsoft Word is more of a software as a service because you're building this software that's built on the infrastructure. But owning that infrastructure as a service business is very valuable because a lot of businesses depend greatly on that infrastructure. And I think we saw this in great strength during COVID, especially, where everything had to move online suddenly. And everything had to be working, everything had to be functional. And those companies which had good cloud operations, those are the companies that prospered. And one of the prominent clients Amazon has for its AWS division is Netflix. So a lot of what you see on video streaming through Netflix is actually run through AWS. And I've talked about mega trends earlier, and other mega trends that Amazon is a good bet on is video streaming, digital advertising as well. It's, I think, the #3 digital advertiser in the world behind only Google and Facebook. It has a streaming TV streaming platform called Fire TV. It's one of the leaders in AI as well, artificial intelligence and machine learning. AI and machine learning, they tie into their cloud computing services. And as they provide these cloud computing services to their clients will use these services and build on top of those services. And this entrenches its service into those IT departments in their clients. And then it's also into other businesses like drone delivery that complements its e-commerce business. It's also bought a self-driving startup called Zoop. So it's also getting into self-driving. Recently it started into telemedicine. That's another trend that I'm quite bullish about. And then the other bets that is making as well, those are like quantum computing. So it's starting this quantum computing division. It's also getting into blockchain. Then it has its Alexa service, which is powering the smart home revolution that we see. And then it also has Amazon Go, which is a cashless store that allows you to just walk in and pay for services or pay for something by just picking it up and walking out. So it's a conglomerate. It's a very big company, but it has many different small businesses within this conglomerate that are prospering and doing very well. So I'll just touch very quickly on also why I chose Amazon as my top holding. So even if it's part of a mega trend, and I believe like immunotherapy is also a mega trend, but I wouldn't know which stock to pick within that trend. I wouldn't be able to understand that very well. But for Amazon, like I mentioned, once it provides its service to a customer, that creates very high switching costs. So a customer is very unlikely to change from Amazon to Microsoft or to Google unless there's a very big problem. And the other thing it does is also creates network effects. So the more clients build onto Amazon's infrastructure, that allows Amazon to take those learnings and take those services and apply them to other customers. So it becomes smart. The whole system becomes smarter as it grows bigger. I think cloud computing still has a very long runway. I think Amazon has a very strong moat in e-commerce and cloud computing and his other businesses as well. And the other thing I just mentioned about Amazon also is that one reason I chose Amazon is because of the culture of the company, basically. It has this startup culture. Even at $1.5 trillion, it still thinks of itself as a startup. It has this day one culture, basically, where it basically every day is still day one. They're always innovating. They're always trying to come up with a better service and a better product. And that ties into another strong value they have, which is called customer obsession. So they're always obsessed with providing value to the customer and ensuring that the customer always gets the best. I think another reason I like Amazon compared to some of the other big tech companies like Apple and Microsoft is because Amazon has never paid a dividend. And that's actually a bit counterintuitive. Many investors like companies that pay dividends. But what I like about Amazon is that it keeps reinvesting the money it makes. So that's how you want to invest, actually. If you want to imagine what a dream company would be, a dream company to me would be something that keeps investing, keeps improving its service and product. So by not paying that dividend and reinvesting the money into the business, I think it makes its service and products even stronger every day. So those are some of my initial thoughts on Amazon.
So I got a question for you. So in terms of like the AWS services, it's currently making up about 12% of their revenue or 13% or something like that. Do you expect this to go up? And also in terms of moat, what do you see around that? Is it just the having the advantage of speed?
Yeah, I mean, in terms of revenue, I definitely see it going up. I think one clear indicator of that is that Jeff Bezos is stepping down, but the person succeeding him is coming from AWS. Yeah, so it goes to show that I mean, they place a great emphasis on the AWS side of the business. In terms of the moat, like I mentioned, I think the high switching costs. Once Netflix has built its whole system on AWS, it builds its algorithms on AWS. It's going to be very difficult or impractical actually to transfer all those algorithms to a different system. And you can see that the Amazon Prime is actually a very strong competitor of Netflix. But despite that, Netflix still decides to choose Amazon as its cloud service provider. So it goes to show that Amazon provides a service perhaps that no other cloud service provider can provide to Netflix. And or either that or that Netflix is just, I mean, the high switching costs have taken effect and it doesn't make sense to really switch to a different provider. So I think that gives it a very strong moat.
All right. Thanks. That makes a lot of sense. I mean, I personally use AWS myself. I use the EC2 and things like that. Yeah, I mean, it's definitely true. I think a lot more developers are going into kind of AWS database management and things like that. Less and less people, or it's less common to find people working on like Alibaba Cloud or something like that. Yeah, so it's definitely a good point. And they've been in the market a while, and you're right, they have a startup culture, and they actually give out credits to startups, which really makes them stay in the ecosystem. So that's a really good point. Switching is not an easy task. Yeah. Okay, yeah, I think we're in good time. So Simone, I think it's any more questions? If not, we'll move on to Simone.
I have
not Simone, Steven, sorry.
Yeah, I do have a few questions about Alibaba. I actually have many. I will just ask a few ones.
Yeah, sure.
So, for instance, now maybe you heard about all the security issues recently with the SolarWind hack. It was mostly affecting many cloud services. So, do you know if AWS was also affected by that?
Is the question directed to me, Simone?
Or anyone who knows, who knows about this?
Okay, what I know is that the main culprit actually was Microsoft and the Windows Exchange systems that were infected. I think the investigations are still going on. They still don't know what is the true extent of the breach. But so far, I've not heard that Amazon systems have been breached. So perhaps that's another indicator of how strong Amazon's security systems are. Yeah.
One more question, because we talked about breaking down conglomerates before. So we have seen that happening with Alibaba. You say now probably here that Chinese government is trying to, so first it blocked anti-IPO, and now is telling them to sell part of their businesses. So do you believe it's could happen the same to Amazon?
Well, anything is possible, I think. But I think, I mean, capitalism has been something that has served America very well. And even unbridled or uncontrolled capitalism is something that, I think a lot of Americans value. And China is a completely different system. So I don't know. I mean, anything can happen, and the government in the US might decide they want to break up Amazon. But I think it's going to be very unpopular, because what does Amazon do in terms of e-commerce service? It provides better prices. You're not going to find a consumer who say that the prices on Amazon are too high, they are extortionate or anything like that. And if you break up Amazon and you make the e-commerce side of the business less competitive, then they may have to raise prices, and that will not be good for the consumer. So I think, I mean, it's unlikely that I think they will go down that route. But anything can happen. Then that's one concern that I do have about Amazon. Yeah.
Yeah. I think we saw this a little bit with, if I'm correct, I think we saw this a little bit with Microsoft in the 90s, where they became, obviously very large, and they took on more and more acquisitions of companies, and there was a lot of stuff, a lot of kind of headlines in the market, and a lot of regulatory interest that they could potentially become too powerful, become a bit of a monopoly, and then start to take over some of the services that kind of smaller companies would have field in the economy. So I think you could see some potential power issues going there, because as you quite rightly said, Amar, I think some of the, it gives consumers a lot more choice at the right price. But if you become the sole player in the market and take away a lot of the smaller companies, you also have power over pricing, market share.
Yeah.
I think there could be some issues there, but I guess, Amar, do you think that it will continue to grow and continue with its acquisition craze and continue to take over lots and lots of different sectors that it's currently not in? Or do you think they're fairly happy with just growing current sectors?
I mean, one question when I ask myself when I'm investing in any other company called, not named Amazon, is whether Amazon can disrupt that industry. It's become such a behemoth that, is capable of disrupting any industry. So, I mean, I won't count any industry as, beyond the reach of Amazon. But I don't think there are certain industries you'll go into, like maybe the pharmaceuticals. But it's getting even into COVID testing, I heard, and they might even, provide a COVID testing product one day. But
Wow.
that's another reason why I like Amazon, because, they're not tied to just one sector or one industry. They're always keeping their eyes open on what's the next big thing. And they've shown in their track record that they are able to compete effectively in a new industry, disrupt it, and grow and prosper in that industry. So I think that's something that will continue with Amazon.
Great, and I think that's good for Amar. I think that's good for diversification as well of a particular stock, because you're not tied to one industry. So if they do get into different industries that are not interrelated with each other, you don't have all eggs in one basket syndrome. You have the spread risk. I think it's quite good. Awesome. Great. Any more questions for Amar, or should we move on to Zach?
I think it's you first, Stephen.
Oh, it's me first.
Yeah, it's you first.
Okay, sorry. Great. Okay, well, I'll give you a little bit of overview. I was a little bit greedy in my subjects and my themes. I couldn't just stick to one. So today I'm going to be doing a bit of an overview of kind of Bitcoin and touching a little bit about the crypto market as well, but kind of focusing a bit more on Bitcoin. And then I'm also going to do a very short overview as well about another core theme that I think is going to have a very big 2021, and that is to do with emerging markets. So I think Bitcoin is a very good investment for not only for 2021, but kind of moving forward as we progress through the years. It's an 11-year technology, which has really kind of taken the world by storm. I think it started off, with a few nerds in the basement who were quite enamored with the technology of the blockchain technology and the ideas of having a global decentralized currency out of government reach. And it's kind of really progressed throughout the years into more and more different types of people that are involved, and we're seeing a lot of kind of mainstream interest. So why do I think Bitcoin is a good investment? Well, number one, I think Bitcoin's a good investment because it has a very limited supply. So there are only ever been 21 million Bitcoin. So that's provides a lot of kind of scarcity. And I think, as we were talking earlier about stimulus, inflation and the power of governments to be able to print money into the system, I think we are at a stage now where I think it's time to celebrate scarcity rather than abundance. I think we're living in a world of abundance, and now it's time to celebrate scarcity. I personally believe that Bitcoin is a better store of value than gold. I think it is so because it is more easily divisible. You know, it's easier to store. You're not going to have to take out a safe in order to store your Bitcoin and how you value. It's borderless. You're able to take it anywhere you want around the world. You don't have to lug it in your suitcase, and you have that kind of store of value property. You know, it's useful in all countries in order to be able to you know, preserve its value. So I think we're going to see more and more Bitcoin eating into the market share of gold and other precious metals over time. I think especially as we kind of move into kind of a digital age, I think the age of, you know, burying gold in someone's garden has you know, is starting to pass. But also we're starting to see it as a corporate asset, a corporate kind of store of value for companies. So more and more companies have put it onto their balance sheets in 2020 and 2021. And I think most large companies, within their company, they have a treasury department in which they handle the you know, handle their excess reserves in order to be able to invest in the business, etc. You know, we are seeing inflation, so they need to kind of preserve that cash. And Bitcoin is emerging as the kind of leading store of value asset. You know, I think previously in the past, a lot of these corporate companies, they you know, preserve the purchasing power of the money in their reserves by buying bonds. As we know, the bond yields, although slightly increasing, are still very low. It's very hard to even kind of track inflation. So I think, and gold doesn't really make sense for them to hold on their balance sheet. And the custody options have become a lot better as time goes on in terms of Bitcoin and the development. So I can see that many more companies over 2021 and beyond are going to put Bitcoin in their balance sheet. So we've already seen that with Tesla. They bought $1.5 billion worth of Bitcoin. And we've also seen Square, MicroStrategies. But in my opinion, I think this is kind of the tip of the iceberg. Bitcoin is actually, over its 11-year history, is actually made over, on average, it has years where it doesn't make money, but on average, it actually makes over 200% a year during its whole life cycle of since Bitcoin was created and had a market price. So in my opinion, there is no better store of value. You may have years where it doesn't perform up to 200, and you do have years where you could potentially see a bear market, but over the long run, I expect this to kind of continue to go up. Also, you're seeing pension funds, who are generally the most conservative investors, getting involved in Bitcoin, even with just small percentage of their portions of their portfolios. So I know that there was a New Zealand pension fund who's invested in Bitcoin recently with 1% of their fund. So, you know, however much percentage of your allocation in terms of Bitcoin, you know, it depends on how bullish you are. And you need to know that it is volatile on a, you know, on a day-to-day basis, and it can change. But in my own personal opinion, I cannot see much of a case why you would not have at least a small percentage of your money in the best performing asset of the last 11 years. As I'm talking about Bitcoin, I think one of the main things about Bitcoin as well is that it's all so, you know, with gold, you have supply and demand factors. Well, it's quite similar in terms of Bitcoin, but the difference is with Bitcoin is that the supply has been set all the way up to, new supply has been set up all the way to 2150. So it's already predetermined, and it's actually disinflationary. So every 4 years, the mining rewards for the Bitcoin miners is actually going to actually halves. So I think that's why you kind of see these kind of 4-year, you know, boom and bust cycles, because every 4 years you're faced with a supply shock. So I think that you know, that might continue, but I think we'll see a slight difference between what had previously been a retail-led phenomenon to a mix of retail and corporate companies, hedge funds, etc. So I think the behaviors of the cycles may change slightly. There are other really great use cases for crypto as a whole. I don't have time to go into all of them, but there's a massive trend at the moment in terms of decentralized finance. I think Zech is also an expert in that area. I think you know, he works in blockchain and has an understanding of that. But I think that's got a big future as well. But our focus on Bitcoin as a whole. Quickly, just going into my other core theme of emerging markets, in terms of the stock market, I think what happened during COVID was that when the COVID incident actually happened, it caused the markets to sell off in, you know, roughly March 2020. And just like kind of all cycle, it caused the whole global stock market to go down as countries kind of closed their borders and industries weakened. But what you see in that case was actually emerging markets actually plunged quicker than developed markets. And the reason why they actually plunged compared with developed markets is that one, I think that emerging markets has more of a reliance on commodities. So if you think a lot of the oil extracting countries, the gold miners, silver miners, etc., most of those are in emerging economies. So Middle East, Africa, Asia, etc. So I think that caused a slightly bigger sell-off. I also think that some of the healthcare systems were better in some of the more developed countries, as there was more access to ventilators, etc. So I think some of those issues actually affected emerging markets much more. But what we did see was an amazing recovery from emerging markets as the year progressed in 2020 and in 2021. And I think a lot of the reasons why that happened is because one, I think we're seeing a slowly weakening of the dollar, which is good for is really good for emerging markets. It kind of means that the kind of debts it's easier for them to kind of service their debts in US dollars. I think that's really important. Also, I think we're seeing a massive appetite in Asia and Latin America in terms of consumers' adoption of kind of technology and e-commerce. So we look at like Mercado Libre, in Singapore, kind of Shopee and all of these different e-commerce platforms. I think they are taking up, there's a lot of interest around them and a lot of buying demand for kind of e-commerce. And I think another thing we need to know as well is that the emerging market has the actual largest consumer base. So again, how many people are there in China? That's just one emerging market country. So they have the largest consumer base, and they have the largest growing gap from, low-income families are actually developing into more and more wealthy and affluent people. So there's more disposable income there. And as the kind of energy resources, as the economies open up again, we're going to see more and more need for commodities. So the same thing that brought the share prices of emerging markets down is actually going to be a key tailwind for the recovery, because there's going to be more demand for oil. Again, like we were talking about earlier, in terms of precious metals being used in industrial uses, those are going to increase. So again, the kind of Middle East countries, a bit of Asia, a lot of kind of gold, copper mining, gold mining in Africa, as well as Chile, Bolivia, and other countries like that. So I think that's kind of going to fuel the growth for emerging markets. So I am more bullish on emerging markets than I am developed markets. Doesn't mean developed markets aren't going to do well, but I think just like they fell quicker, I think they will rise quicker in terms of the recovery. So lots of different ways that you can get exposure to that. You can get exposure to that through the individual stocks in Asia, Middle East, Africa, Latin America. Or you can also, get exposure to that through indexes. There's emerging markets indexes, and also you can get individual countries in emerging market indexes as well, which you can take a position of, or you can invest in a popular investor who has good exposure to emerging markets, which is a bit of a theme of my portfolio. So yeah, those are my two themes.
That's great. I actually have a lot of questions. I also have to pick only a few for you. I don't know if others also have.
I have some questions on Bitcoin.
Okay, you can ask first then. I'm gonna come after with the remaining questions.
Okay, I'll just be quick. I mean, I had this thought experiment with Bitcoin that I ran in my mind. Generally, with the asset, you want to own all of the asset. For example, you want to own all of the gold in the world, or you want to own all of the stock of Amazon. But with Bitcoin, I feel that if you owned all of the Bitcoin in the world, no one else will really want it from you, right? If you owned all 21 million Bitcoins, it will go down to zero the next day, because I mean, there's no network effect basically, I think, anymore in the Bitcoin system. So that's one concern I had with Bitcoin, because it runs so counterintuitively to how you want to own different kinds of asset. And then the other question I had about Bitcoin is in terms of its security. I think Bitcoin has survived so long because it has one of the highest security profiles of all the other cryptocurrencies. But we haven't accounted for major advances in other types of computing. For example, quantum computing might come up one day. Could that be a way to hack into the Bitcoin network? And if it succeeds in hacking into the Bitcoin network, what happens to the value of Bitcoin then? So just those two questions, yeah.
Okay, so I'll take them one by one, and just remind me at the end if I don't cover off any of your questions. So the first of all, so we touch on that. The first part that you mentioned was, is it a danger if an individual or an organization owns too much of the Bitcoin supply, which stops it from being a store of value, because not everybody would own it. So so I'll answer those questions one by one. So I don't believe that there could ever be a situation where an individual or an organization could own all 21 million Bitcoin. We've also gone way too far in the evolution of Bitcoin, even though it's only 11 years old. There are, quite frankly, many people that, including myself in certain areas, who would refuse to sell their Bitcoin to anyone. And I think there's a massive, I think with the best performing asset of the last 11 years, and such a great store of value, I think that there's more and more demand from all different institutions, individuals, high net worth individuals. And I think, like, if we actually look at some of the records in terms of the blockchain records, in terms of wallets, etc. You have seen that in the majority of wallets, there's very little activity of people, you know, selling their Bitcoin, moving them to exchanges. And a lot of Bitcoin hasn't been moved in the last year or so, or 2 years, despite an increasing Bitcoin price. So I think it's very unlikely that an individual person or company would have too much of the supply in order for it to be kind of deemed valueless. I also think there's a lot of incentives for many different people to own Bitcoin. And I think that ranges from institutions as well as kind of hedge funds, pension funds. But actually, I think in the long term, if we're talking 10, 15, 20 years later, I think many governments are going to get into holding Bitcoin on their balance sheet, on their balance sheets, like they previously held gold in their vaults before. I think they're going to start to hold Bitcoin. So I think that's going to be spread. But I think there's a lot of game theory involved as well. And I think, you know, there's going to be a big transfer of wealth from people in the traditional systems, you know, into the Bitcoin wealth. So there'll be a lot of transfer. And I think the companies who will do very well, and the nations eventually that will do well, will be the early movers. Of course, they have to accept an element of risk with any new asset, but I think the early movers are going to get the advantages in terms of kind of game theory, and kind of the last ones through the door are going to suffer the issues relating to that. In terms of quantum security, etc., I believe that I think that the talk in the media, in other areas, I don't think quantum is actually as advanced or progressed as actually a lot of people think it is. I also think that you know, in many years' time, I think there's the possibility of developers, Bitcoin developers, crypto developers, etc., being able to make kind of small amendments to the blockchain, etc., to be able to try and kind of counteract some of those security issues if it was to happen. But in my honest opinion, I think we have well worse problems than our Bitcoin holdings if quantum actually takes off, you know, because this can affect every asset, as we're in a highly driven technological world. You know, there's a lot of national security issues that would play a much bigger part than just Bitcoin if there was massive advantages in quantum.
To add to that like a little bit, so Bitcoin, Ethereum, and all that, they improve some. The developers get together. The core developers always get together on improving the system, right? For example, like there was like difficulty bombs that were moved way down the road because of the price of Bitcoin at the time. So yeah, if quantum computing were to catch up and were to somehow be able to figure out the algorithm, it's now SHA-256.
Yeah,
I think they can improve it to SHA-512 or improve it further than that if quantum computing were to come about. Yeah.
Yeah, I agree with you there. And that's only what's capable right now. By the time quantum computing, you know, gets much more advanced, we're going to have a lot of solutions because it's going to be needed in more than just blockchains.
So I'm going to ask quickly this question. So what is the role of Bitcoins in emerging markets? Because I've seen that, I think so, you can correct me, but India banned completely cryptocurrency, for instance, right?
Yeah.
And then also many US investors, institutional investors says, I'm not going to mine Bitcoins. I'm not going to buy Bitcoins because they are mined in China. So
interesting question. Okay, so one thing you need to know is China and India constantly change their thought process around Bitcoin and cryptocurrencies. they blow hot and cold, they increase the regulations, decrease the regulations, depending on what serves them best as a country. So China, in a way of kind of, they really kind of turned a blind eye towards mining, crypto mining, because it's kind of a large revenue driver for China. So they have this relationship where you know, they want to protect their own national interests, but they also want to be part of blockchain, Bitcoin, crypto as it moves forward. In terms of, I think what we're seeing in terms of, you were saying about mining, and you're saying about the US companies not wanting to, some people not wanting to have Bitcoin because it's mined in China. I think you're seeing a massive distribution of mining activities going on in the world. A lot of it's not really focused on the geographical location of that place. A lot of it is on the economics of how cheap it is to mine Bitcoin. But you're actually seeing a lot of distribution of that previous China mining actually being moved to countries like Iceland, which have also access to different types of energy resources. You're also going to see mining not take up as much energy as it had done in the past in terms of normal energy, and you're going to see a lot more kind of towards kind of you know, wind energy, solar power, hydrogen powered kind of mining. So yeah, I think it's going to be less and less reliance on China, which had a very low energy costs, and I think that's going to be distributed around the world. So last but not least, Zach is going to give kind of his theme for 2021. So Zach, do you want to kind of take it away and explain a little bit more about your theme?
Sure. So I'm going to go pretty quick on this one. So my theme for this year is, first of all, I think we did talk about this just now, this increase of retail investors. A lot more people are coming to market. And I think, like Simone said just now, there's also an overreaction to the market. So what all this is telling me is that there are more and more traders coming to the market who have less experience. And that may not be a good thing, may not be a bad thing. It's just what the structure of the market is. So when we look at the S&P 500, I think this was done in a study done in August last year, right? The S&P 500 was up 25% at that time of the year. But if you exclude just the top 10 stocks, right, the S&P was actually down 3.4%, meaning that the top 10% of the index actually took most of the profits. And having said that, I think that what's going to happen over the next few months is you're going to see a lot of active investors making more money. People like Amar who really do their research and look into the stocks very detailed. Even Simone, who looks at biotech stocks that most people can't look at because simply we don't understand them. And even for you, Stephen, I'm sure there are many things that you are looking at that most people are not aware of. I think these are actually going to create a lot of value over the next 12 months, and it's going to outperform the index. That's my view. I would just paraphrase, I would just put this up with a little bit of evidence. I think if you look at Visa and MasterCard, they are trading at multiples above Discover and Amex. And like for MasterCard right now, the P ratio is about 57. Amex is only about 38. Visa is at 46. Discover is at 27. So there's a huge opportunity for all these smaller cap names to make a name for themselves. And I think that they're trading quite cheaply as well compared to the broader index. So I think these will really perform. Okay, my second thing is really just home builders. So home builders, because housing inventory in the United States is very low. People have been buying houses, and I believe they've been buying houses outside of the major cities. So places like Texas, there's going to be just a lot of buying, and it's going to be a lot of building that's required. I think we talked about the acceleration, the speed into digitalization. I think Stephen talked about this now. That's why Zoom is suddenly like trading at whatever multiple it is. My personal view is that these home builders are going to make a lot of money because they'll be building new homes in places that otherwise would not have new buildings. So yeah, that's kind of my two views. I went through it very quickly, but that's it. Any questions?
Okay, I have a question on the home building portion.
Go for it, yeah.
So do you see So how do you see the kind of distribution of people? So we're kind of living in a world we were talking about earlier with more reliance on technology. So that means that potentially there'll be kind of less need for these kind of hubs such as New York, San Francisco in terms of kind of the tech scene, and you may see people moving out to kind of other cities. Do you see that kind of continuing and people kind of being able to work from anywhere, so you can actually live anywhere too? And in terms of the kind of home building, does that mean that we're likely to see an increase in terms of the home builders because people are going to move out to less and less developed places with lots of free land, and want to live at the world with, you know, lots of acres of land in more secluded places? What are your views on that?
I think certain jobs definitely can go out to the cities, especially jobs like development, like coding. I think those are going to be increasingly more remote. I think there will be jobs like, for example, like yoga studios. I think those you can't run away from. You need a person. You can't teach it online. It's just how it is, right? So I do believe that there will be some allocation changes, and I do believe people will be moving out of the city because of this convenience. But I also do believe that these smaller cities like Texas will start seeing a lot of like yoga studios and things like that. So it's an interesting opportunity. I'm not sure how to express it other than buying the home builders. I would like to figure out another way to express it, but I haven't quite figured that out yet. So yeah, but I do see people moving away from the major cities.
How are you approaching that from an investment standpoint, Zach? So are you, in terms of home builders, would you be more inclined to, you know, buy a home builder ETF and kind of spread your risk on different home builders, or is there any particular home builders that you're more bullish on?
I prefer, like you said, I think it's better to spread your risk on that. So I bought the NEO index. But I have so much cash in my portfolio that I'm probably gonna do an equal weighted index. But we'll see how we go. I mean, NEO is charging like 1% expense ratio, and there is that element of time decay because they use options contracts. So yeah, I'm probably gonna switch it to something a bit more vanilla, but it'll take some time because that one requires a bit of engineering, a bit of math behind it. Yeah.
Okay. Is it just home builders that you're really bullish on, or are you also bullish on these kind of REITs type of, you know, stocks, which you know, obviously, are you bullish on the general kind of real estate sector as a whole, or is it you kind of more leaning towards home builders?
I'm really leaning towards home builders because if you look at REITs, they are yield defensive instrument, meaning they are more fixed income in their nature. So yeah, staying away from REITs for now. Laggy, right?
Yeah, it was, but I think so we understood the message.
Yeah.
Stay away from REITs.
Stay.
Yeah. Yeah. Stay away. Yeah.
I think again, I think it's again to do with this kind of inflation stuff again. I think anything that you know, there's a limited supply of land, is going to probably do quite well because kind of that store of value component. Anything that can be nailed down, comes out of the ground, stored on the blockchain, I think has quite a good future.
Yeah.
I have a question that it's not about investments itself, it's more about tax law. So tax law, it's usually different from, for instance, capital gains from normal stocks compared to capital gains from real estate. And I guess that includes home builder, especially in Singapore. So do you have to do any other comply to any regulations for invest, at least as a Singaporean, to invest in real estate, even if it is a foreigner one, or you can just invest and as any other stocks?
I think for Singaporeans, all we have to do to trade this is, especially since I'm buying an ETF, is really open an account with Etoro. So in terms of compliance, all you need to do is fill in your W8 band form, which I'm sure all three of us have, all four of us have. And other than that, yeah, it's just a ticker off the exchange. So it's not much in terms of regulation.
Okay.
Yeah.
I just have a question and a comment.
Sure, go for it.
Yeah, regarding the Visa Discover example, I mean, I know Visa quite well because it's a stock I've owned for a number of years already.
Yeah.
I think the main difference between Visa and Discover is that Discover has a closed loop system where it it also takes on the credit risk and it makes the credit loans to consumers. Whereas Visa has an open loop system. It works with all the different banks and it doesn't take any of the credit risk. But I think the main advantage of this is actually that Visa has been able to expand its network much more than Discover, basically. So that creates a very strong network effect, because basically you want to use a card where, a card that's accepted everywhere. And Visa is a card that's accepted everywhere, and Discover, not so much, I would say. So I'll be a little careful about saying that, Discover doesn't need to trade at the multiple valuation it does, or that Visa is a bit too high. I think Visa perhaps deserves a higher valuation or multiple than Discover, in my opinion. And that's just a comment. And then the question I had about home builders is, I get that more people want to move out, especially from very dense and congested cities. But if I could live anywhere, and if I could work from anywhere, I'm not sure if I'll choose Texas to live in or work from. If I could live and work from anywhere, I'll probably choose a resort island or something like that. So I mean, I'm not sure how sustained this trend of more houses in Texas will be.
Right. Okay, I'll answer that in sequence. So I think the first one that you talked about, Visa and Discover, I don't disagree with you. I do agree that the open and closed loop systems you do make a huge difference. But it's not the payment space. Visa, MasterCard, they charge you what? Oops.
I don't think.
Yeah, I'm lagging, right?
Yeah, I think so. I missed.
Yeah, sorry. My internet is a bit choppy. So yeah, I think if you look at the payment network, I think generally they are overvalued. So I'm not saying Visa should be valued lower than Discover. I agree with you over the closed loop and open system. But I think the point is people tend to steer towards stocks that they understand, that they know, that they've heard of. I think Charlie Munger was the one who said there's something called a home country bias, which is people buy stocks that they are more familiar with, so they buy stuff from their home country. So I just think those retail names are gonna just underperform less heard of names. Yeah, so to the second one, I think about home builders, I definitely agree with you. Will they live in Texas itself? The answer is probably not. But home builders themselves, they just build homes. They don't own the land. They have land parcels and things like that. But I'm those places.
I missed again. I think you're lagging.
That is it.
Yeah.
Just repeat the last part.
Last part, yeah. So I'm more betting on home builders.
No, it's not working.
People just build it as opposed to owning the land itself.
Yeah, I think the internet.
Yeah, I don't know, man. Yeah, let's try again.
Can I? Okay, try.
Yeah. Let's try again. Last time. So yeah, my play is the land itself. It's not the land itself. Sorry. So it's not that I believe that the land that they're holding on to is going to go out in value. I think that's my effect. I think the main is really people just building homes all over the United States then, as opposed to one single place.
Yeah. Yeah, I agree. I agree with that. I agree with that, Zach. I think, you know, I think the home builders will actually benefit, you know, regardless of where people actually live in the US. And you know, US are not huge travelers outside of the US. So, even if they do move from the New Yorks or the San Franciscos, they're probably quite likely to move to another part or another state in the US, which would benefit the home builders. Yeah.
Can I add one thing here? Again, it's not my area, but one factor that could influence this is that so people can work from anywhere they want, but still in the future it's very likely that at least once in a while they will have to go to office, maybe once per week, once every month. So they cannot go too far away. And many companies say that, okay, you can work from anywhere you want, but it needs to be in North America. It cannot be from Bali. So you will be kind of restricted to a certain location. You don't have to be in the city center anymore because it doesn't make you're not gonna commute every day. But somewhere nearby probably.
Agreed.
Just a quick question, a quick follow-up. We talked about inflation earlier, right? And so mortgage rates are tied to inflation. And I think the home building business is also tied to mortgage rates. So if inflation does kick in and mortgage rates do go up, will that be bad for the home building business?
Oh, absolutely. I think if inflation kicks in, the only thing you can do is increase the interest rates. And if you increase interest rates, does that mean people live in smaller houses? Absolutely. It will definitely affect it. But I think unless it's a monumental increase, like we're talking about, I'm sure you guys know when you rent a home or you buy a home, it's against the float rate, which is the 0 to 6 months rate. Unless that goes up by 300%, I don't see it as a huge factor.
I think some of that will be maybe some of it won't just be about affordability of houses and new build houses. A lot of it will be to do with the financing. Because if the interest rates go up, it means that you know, the loan repayments to the bank and the interest will increase, which make it slightly harder for people to pay off, I guess. That might be one.
Exactly.
Any more questions for Zach? Anyone? No? Okay, thanks very much, Zach, for you know, letting us know your theme. I think giving us all a really great insight, and I think everybody's themes have you know, really given a lot of people some food for thought in terms of the investment. So thanks very much, everyone, for being involved in this panel. I think from time to time, we'll introduce new Singapore investors from the Etoro platform to our chats. So everyone can get some different expertise and specialities on the board. So hope it was really useful for the listeners. And so thank you very much, everybody. And thank you for all participating.
Thank you.
Thank you.